Elizabeth, do you have stuff to announce?
I do not. Just you can continue going on.
All right. Does anybody have any questions from yesterday? We went through a lot of information. So I've got funky glare on my computer, which is a little challenging if anybody tried to ask something. Okay, you ready to talk about proprietary fund accounting? Of course you are. Nothing you'd rather do. How many of you run proprietary? How many of you know if you're doing housing as proprietary or government? How would you know the difference? If you're running it on a proprietary fund, you generally will not have a capital outlay line item on your financial statements. Yeah, we got some weather issues for some people. So is anybody doing proprietary that you know of? It's usually about 50-50 on proprietary versus straight special revenue. If you are doing it, you're going to show it it's almost exactly like if you were running a for-profit business. The thought process involved is that the fees and charges are being used to offset the cost of the activities. Now, we all know that what you're charging for rent versus what the fair market rent is not even close. But again, it is an allowable method. Here we go with grant revenue recognition. And we talked some about this yesterday afternoon, but probably need to spend a little more time on it. All right, this is a government mandated non-exchange transaction. You're getting a grant without providing something in return. Yes, you are providing services, but those services are only being provided because you have the grant. You're not giving the government back something of value. They're not buying the houses or something like that. Okay. Does that make sense? Yes, no, a little bit. Okay. It's not your money until all of the eligibility requirements are met. What did we say about that yesterday? Has to be spent on an allowable cost before it's your money. So it's a refundable advance. If for whatever reason you have money on hand, that's grant money, you also have a liability because in theory, you could have to give it back. This is pretty much every grant is going to run like this. So this is not necessarily NAHASDA specific. This is standard grant revenue. There are very few grants that do not operate this way. I'm trying to think. Some of the self-governance grants, like BIA self-governance, usually it's your money when you receive, but it will specifically say so. Lucia says hello, everyone. Do you have any questions on that? Okay, expense recognition, government fund, costs that result in a decrease in current financial resources. Modified accrual. What are examples? How do you record tenant accounts receivable and rents? Who are my accountants in here? I'm getting beaten to death with this tale. Yeah, you debit accounts receivable, credit revenue. And then what? You do that at the time you create the invoices, correct? Why do you do it that way? Yep, because it's due. That's when it's due, measurable and available. They owe you. Then as it comes in, what's the entry? Reduce the receivable and debit cash when the payment's received. Yep, pretty simple. Is everybody doing it that way? Okay, capital assets and depreciation. When you purchase an asset, what's your entry? Are you doing a debit to capital outlay expense, or are you doing a debit to equipment? I'm going to be very clear. Both are correct. It just depends on what method of counting you're using. Okay, so everybody's doing a capital outlay expense, and then at the end of the year, you close it out into your assets, correct? Y'all are doing the government method. How often are you recording depreciation? And how are you recording depreciation? Doing it at year end. Why are you doing it at year end? It's a good answer. You're doing straight line quarterly. Does it show up, does depreciation show up on your financial statements? On your statement of revenue, expenditures, and changes, also known as income statement? Okay, you are recording depreciation expense onto the financials at every quarter. quarterly for each asset in the system. Here's what I'm trying to figure out. Is it showing up on the financial statement that is reviewed by council every quarter, or is it just going to show up at year end for reporting purposes? Yours is just at year end. Why do most people do it that way? What's the theory behind that? Does anybody know? Okay, who wants a little tiny accounting theory class? I'm going to do it anyway, so you might as well say yes. What's the purpose of depreciation? Does anybody know? Wear and tear on assets, a little. It's mostly, yeah, we're kind of, Amy's on the right track here. Matching long-term costs with current usage. The reason we have depreciation is to measure the asset contribution to us earning money. Okay. Do we earn money? Are we a for-profit organization? No. We've already said that's not the point of government. Government's to provide service. Back when GASB 34 came into play, that's when depreciation had to be included. So how many of you have looked at your audit report? I mean, some of you may have had no reason to look at it. You will see a reconciliation between the government-wide financials, which are presented as full accrual, from the fund financials, which is what we're talking about right here. One of the entries that goes in to change fund accounting to full accrual is that depreciation is the capital outlay. Okay. We didn't used to record it because it's not, I mean, it kept, but not really acknowledged, because we're not trying to earn a profit. So the theory is a little off, but GASB says we're going to do that. That's Government Accounting Standards Board. And so we have to do this now to have financial statements that comply with GAAP. Okay. Why, other than modified accrual basis? What's another reason most people do not initially include depreciation in their monthly financial statements? What are we looking for when we look at our financial statements? We already said that for grants, revenue and expenditures have to equal, right? Do we draw down money for depreciation? Nope. Depreciation's a non-cash. Yeah, it's a non-cash transaction. So normally, unless you are doing proprietary fund, normally you will not show depreciation expense in your statement of revenues expenditures. Okay, it's a lot of information for a pretty simple question, but I've always found if I understand the why, it makes more sense for me instead of somebody just saying because. Maybe it's because I have a teenager and I'm used to explaining. I don't know. Okay, does that help? Does that hurt? Does that make any difference at all in your life? Does it at least kind of make sense? Your depreciation is held on the tribe side, and that makes sense. Are your fixed assets technically held on the tribe side as well? Or do you hold them? Mm-hmm. Yeah, and that makes perfect sense. If you're a tribal department, it's perfectly reasonable that the tribe is going to hold all of your assets and all of your depreciation. You're going to have a code assigned, so for your tracking purposes, but they own this. So yeah, it's reasonable. Again, it's weird. And the whole point of GASB 34 was an attempt to make government financial statements comparable to for-profit companies. Not really sure why, because again, they're completely different purposes, completely different uses, but decision was made. We don't have to like it. We do have to do it. So yeah, those of you who are dealing with the auditors and they're doing all of these adjustments and working with you on those, that's why. So how much of that do you discuss with your board and your council? Oh, please tell me everybody's reading Amy's comment, because I gotta tell you, I agree. It's not bringing any value to the financial management process. But if we want to have a clean audit and meet the requirements of GAAP, we've got to do it anyway. Okay, accounting for the IHBG award. Statement of financial position is what we commonly is the balance sheet, basically. Assets plus deferred outflows equals liabilities plus deferred inflows plus fund balance. For our purposes, we are going to say assets equal liabilities plus fund balance. Here's the part I really want you to understand. What is included in that fund balance? Do you have a fund balance for the NAHASDA fund? Not if revenue equals expenditures. Yeah. Maybe if we have a grant request that hasn't come in, we might have a fund balance. Where do we have a fund balance that we have to care about? Program income and non-program income. Yeah. NAHASDA presented on a government method is usually zero. If there is a fund balance, it is because of your total assets, total capital assets that you have. But in general, it's the zero. When we look at program income, we should have a fund balance. Why? Because we're not spending all of our money from year to year. Same situation with non-program. So for your financial management purposes, why do you care? What do we have available other than grant funds to support our activities? Have we committed our program income to a particular project? How are we monitoring that information? I mean, they're not NAHASDA funds, but they are funds used to support housing. So you do have to have accounting for and awareness of. That's where you have your flexibility. Yeah, you've already established your IHP and what you're going to do. So you had your flexibility when you set up the IHP, but now that it's approved, you're committed to doing those activities. It's a lot easier to adapt when you're using program or non-program. What's the other thing that's really important for you to monitor as part of your financial management with program income? If you are using program income to pay your expenditures up front and then do your drawdown, make darn sure it's documented and you are getting yourself reimbursed. Okay, any questions on that? Statement of revenues, expenditures, changes in the financial position, also known as the income statement. Operating revenues less operating expenses plus non-operating revenues than expenses equals change in fund balance. One more time for everybody in the back. How much does our fund balance usually change during the year? Usually zero for NAHASDA. What are non-operating revenues and expenses? How many of you have a Coke machine in your housing office? Nobody? Really? Okay, you pay for your water. That would work. That makes sense. Yeah, I mean, non-operating revenues and expenses are the things that don't have anything to do with our grant. Why would we have money coming in for non-operating revenue and expenses on our NAHASDA? Why would we do that? Donations. Can we transfer program income into NAHASDA? Is that an option? Think about the 20% cap. What if we went over? What are our options to account for that? We didn't get approval, which means we can't use grant money. What are our options? We have an option to transfer the expense to another income source. We have an option to transfer another source of income in to cover the overage. What we cannot do is pay more than 20% of our grant on planning and admin. Okay, does that make sense to everybody? It's kind of tying back to yesterday. What happens if you go over? You're going to pay it with something else. Does that make sense to everybody? Is that how you would do it if for some odd reason you went over? Yeah, that's pretty standard because stuff happens. Do you have any questions on that? Okay, here's a sample. Going back, why do we have a balance here? Why do we have a fund balance? Because it includes more than just our grant. We already know from looking back to yesterday, the $350,000 in federal grants was spent on federal allowable charges. Part of it was interest, because we did have some interest expense recorded there. Trying to remember what the other 350, it was 300 for the NAHASDA and 50,000 on the IHBG. That's the problem. They're showing this as proprietary. How do I know they're showing this as proprietary? Just looking at this, how do I know this is proprietary? Depreciation. What's missing? Capital outlays. Because we know they had at least 50,000. Actually, they had 75,000 on the building. See, now I'm gonna go double check. Oh, God. Figures I'd have to go all the way back, doesn't it? Let me just sec. Going all the way back to our IHP. Didn't seem that far back this morning. There we go. Office building, 70, we had 75,000 from ICDBG, this Rasmussen, and 70,000 from NAHASDA. We do not have that account down here. That's how we know that we are dealing with a proprietary fund, because they booked it directly to. Close your eyes, it's going to make you dizzy to go through these. There we go. Okay, is everybody, relatively familiar with this? I mean, you run these all the time, right? Is this one of the reports that you run for your council, or do you just do budget to actual? Just do the budget to actual. Do they ever get a copy of the statement of revenues, expenditures, and changes before they look at the audit? It's always in the audit report. You don't? Yeah, why is it not relevant for them? If you're doing the budget to actual, you're providing them with the information on the program income balances, non-program income balances. This is just a bookkeeping thing. Chart of accounts. This is the usual numbering system. Doesn't have to be your numbering system. Does anybody do something different? That's pretty standard. So you don't do it nine. Most people use the 9,000 for indirect if they're involved in that. They have an indirect cost pool. That's usually where it goes. Any transfers may go into the 9,000. Yeah, I'm not surprised that your expenses are more, what, probably the 5,000. 5,000 is payroll. Okay, so when you look at your accounting code, and I'm going to put this in chat because I think it'll be easier if we can see it. So do we start with the fund number? So we're going to have our fund number. Do you then go to the revenue or expense? Or do you go to the program, the activity within? Both are correct. Okay, you start with the program. Interesting. Fine. Okay, so you go fund, function, program, object code, account code, grant project. Okay. What's your function? What are you putting as function? We've got program, department, funding source, and the expense line item. Are all of these reasonable? Yeah. What are you looking for when you set up your account codes? Function is subclass for services. Makes sense. You just go fund and account code. Are you not splitting it by program, Amy? And when I say program, by activity line item, or is that accounted for in your account code? Okay. No, that's fine. And it would make sense that you would do that. And how are you? One of the things to think about as you go into it is, do we need to split everything out by activity on the IHP? I'm going to pretend we're all doing that. Okay. Let's assume this is what you're doing. You're doing it for the fund, the IHP activity, the account grant. How many different ways can you look at reports? What different things can you look at that way? First thing, we can look at all of NAHASDA. We could sort by each different IHP activity. Let's see everything that we put into maintenance for our 37 act units. We could sort by everything that went into maintenance, period, or total payroll, anything like that. We could sort by, what grant year? What's the grant period? Why does that matter for you? What's the point of having these options? Everything that's, a segregated piece, every segment of this, you can sort by. Why would you want to do that? There's a ton of reasons you'd want to do that. Reason number one, fill out your APR. You'll need your NAHASDA and your IHP activity. If anytime you just want to look at just what's happened in NAHASDA, anytime you only want to see what's going on with maintenance, when you run your budget to actual, you have multiple ways you can sort that as well. Why do you need to do that? Or at least why do you need to have the ability to do that? To get the right information to the right people. If I am housing services manager, do I care about all of the IHP activities? No. What do I care about? Probably just the activities that I'm over. So anything that would involve housing services, I would take a look at. Does that make sense to you? So here's my next question. Is everything that you've included in your accounting string bringing value? Yeah. If it's bringing value, if you're using that information in some way, then absolutely you have it set up correctly. If it's just a set of numbers and you're not really using it, you're not running reports on it, you're not using it to measure or assess or plan, then you're throwing too much information in and you might want to look at changing that. And why would you want to change your accounting string if there are sections you're not using? What's the problem with just leaving it? I mean, can you just leave it? Sure. Why might you not want to do that? If there's numbers in there, waste time, waste energy, potential miscode. Yeah, leaving room for error. Keep it as simple as is effective for you. And everybody's going to have a different assessment of what's effective and what's not. Okay, does that make sense? Do you see why this is management side? Who's using the information? Oh, reconcile. How many of you have a system for looking for orphan accounts? Accounts that don't have a home. What's the cause and how do you find them? Okay, they're showing up on your revenue. Revenue expenditures changes. Yeah, one easy way to do it is run a trial balance for all of your accounts and see if we have any danglers hanging out there. Another thing is if you run your trial balance and it doesn't balance, I guarantee you've got an orphan account in there somewhere. How do those usually happen? Data entry error, or somebody adds an account. They can't find this one, so they're going to add one. How do you keep that from happening? Procedures to add accounts. Yeah, limit permissions in system. Think about your own system, and this is more than just your financial. What area do you find a lot of mistakes in? And the answer is going to be your vendor list. Why? What happens in your vendor list to create chaos? Duplicate. Nicole has never once had this happen in her life. Yeah, why is that a big deal? Why does it matter if we've got a vendor in there for a couple, 3 times? 1099 reporting. Our reports are not going to be accurate. It gets ugly. You don't want to deal with that. So how many well, we'll talk a little bit more about it when we get into some of the controls, but let's just do a basic discussion at the moment. How do you prevent those things from happening? What are some options? And remember, when we think about internal controls, it's to prevent or detect and correct. Try to limit to 1 person adding vendors. Okay, well, I'm going to be honest with you. I'm the only person entering stuff in my financial system. And if I try it once and don't see it, I'm just going to add them again. I'd love to lie to you and tell you I've never done that to myself, but yeah. Yeah, so how do we catch it? How many of you run vendor reports? You've got an option to run by EIN or social. Okay, but what if I'm in there on my EIN and on my social? Because I had to keep filling out W-9s over and over, and I couldn't remember which one was in there. Again, I may be a CPA, but that doesn't mean I'm brilliant sometimes, okay? Freely admit I've caused chaos, not intentionally. Does anybody run a vendor list? Do you have the ability with your accounting system to run a new vendor list so you can see who's been added this month? Yeah, ask them and see if they're doing it. Another thing some tribes do with vendor lists is run it, quarterly. Here's who we've dealt with this quarter, and have council look at it. Why does council need to look at your vendor list or your board? Why would board or council want to see your vendor list? Number one, if you're a very small housing authority, it's a great control for oversight. Yeah, and just because they've never asked doesn't mean that it might not be helpful. Why would they? What would be their reason for looking? Just to see, do we, the oversight board, know who all these companies are that we're doing business with? Do we have a clue who these people are and why we're paying them? Nicole, when you export your list into Excel, do you do a sort like by address or something to make sure you only have one vendor in there instead of multiple variations? Yeah, ERAP's been a killer on adding vendors. And I think that as you're going through, you're going to find some duplicates. Yeah, I know. And remember yesterday when we talked about the compliance supplements? There is one for ERAP, and I do have that if anybody wants it. And you do, because it's going to be tested as a major program. Because Treasury has said it's going to. Yeah, it's been a mess. Because how many tenants went in? Okay, so you already did yours for 21. Okay. Yeah, those of you who still have ERAP and half running in your fiscal year 2022, those are going to get pulled as major. Okay, so back to accounting. We're always looking for our errors. And as we talked about yesterday, we want to find them quick because we want to get it fixed and we don't want to have to go through a ton of information to find when the problem happened. So make sure you are reconciling, make sure your numbers add up. Make sure you have that source document to support everything. What's a general ledger? Exactly what it says. A complete record of a company's financial transactions since the beginning of time. Or your financial Bible. Includes every single account and everything that's gone to it. Okay. How many of you review your GL on a regular basis? How do you do that? When we talk about reviewing and reconciling the accounts in the GL, do we go back from the beginning of time, or are we looking at, a 1 month slice or a 1 year slice? Reconcile the past month at a time. What do you use? Tell me specifically what you do. What do you use to verify your cash? Bank recs. Yeah, if you have investments, like with program income or anything, you should have those investment statements as well to verify. Obviously, if you're investing your grant funds, you better have those statements. Subsidiary ledgers from the fee account and bank recs, AR reports. That's what we're the next place we were going. How do you verify your tenant accounts receivable? By looking at the accounts receivable reports from Does everybody have a housing management software? I mean, in theory, you can do it manually, but you really don't want to unless you have, fewer than 20 units, in which case maybe. What else can you reconcile from there? What can you find in your tenant software or your housing management software that's going to have an impact on your financial statements? Security deposits, charges to tenants, aging reports, maintenance. They're reporting work order costs. Should be able to run that. Yeah. There's a lot of information you can use to verify that. How do you verify your drawdowns? I mean, you can definitely go to your e-logs. Can look at your bank recs. What are some other things you might use? You should have some kind of request to do a drawdown. Should be able to verify those. You should have receipts to verify deposits. Got a voucher, you fill out, yeah, that information. So there's a lot of information. What's another thing you can do that's really helpful? Okay, Amy, does the e-logs draw down to the accountant to record? She counts it when it hits the bank, and if it doesn't come in, somebody's hollering. That's good. What's another real basic thing you can do? Look at the general ledger and see what the descriptions are. Does it make sense that we have a payroll in a maintenance account? Probably not. I mean, we're looking for that. We're looking at it from the financial record side, and then we're generating reports to send to program managers, to directors, to board, to council to check us. Okay, you're supposed to check out each other's work. We want to find the problem. That's what we're talking about with internal controls. It's not a punishment thing. Okay, questions on that? You rely heavily on your directors to catch this type of accounting errors. That's how it's supposed to work. Okay. They're the ones who know what's going on in their department. It is not possible for you in finance to know that. So you have to rely on them first to get the coding right, and second, to review it, to make sure that they didn't make a mistake and you didn't make a mistake. And if there is a mistake, we're going to fix it before the board gets a look at it. That's your internal control system being effective, okay? Doesn't mean you're stupid, doesn't mean you screwed up, anything like that. That's your system working. Until they figure out a way to make all of us robots and never, ever, ever have to make any judgment calls or, worry about doing a manual entry that might not be correct. Until that happens, we need a system to check. Make sense? Because trust me when I tell you, I have my moments. Yeah, when you screw up, I get mad when I don't catch it. And maybe if one of the things that we're going to talk about with internal controls is tone at the top. Let's focus less on hurting each other's feelings and more on making sure that the information we have is accurate. I'm a big fan of really encouraging everyone to ask questions. Not only do we make mistakes, but sometimes people just don't understand what that report is telling them. That's fine. Ask me and I will do my best to walk you through it. And if that doesn't work, I'll try another way, or I'll run the report a different way. But either way, it's important that that information is flowing through the system. All right, any questions on that? What's the trial balance? Basically a GL summary. This is what the balance is for every account in the GL. Total debits better equal total credits. What happened if it doesn't? You're out of balance. How does that happen with your accounting system? How can you be out of balance? Because it forces you, as you enter a debit, to enter a credit. How can you be out of balance on your trial balance? Something is posted incorrectly. Somebody added an account without having that discussion. Oh, due to, due from. Oh, somebody didn't know what the other half of the entry should be, so they shoved it in due to, due from, and are going to let somebody else figure it out later. Again, I'm sure nobody on your staff would ever do that. That's not your staff, it's other tribes, not you or yours. Yeah. If your trial balance is out of balance, the first thing you need to look for is, do we have an orphan account? That is almost always the issue. If that's not the issue, look for a transpose number or somebody shoving numbers in their force balancing. But is the force balance really going to show up as a trial balance being off? Probably not. So what do you look for to find those whoopsies? Do we have a balance in an account that we shouldn't have a balance in, such as due to, due from? I mean, I'd love to lie to you and tell you that it never happens, but we all know that'd be a big fat lie. Okay, sample of a trial balance, pretty basic. Debits equal credits. So right there we have a reasonably good assumption that all of the accounts have been included in our reporting. Everything got coded to some report item. It's not hanging around out there, and we did manage to use the system at least correct, basically correct. Okay, now let's get into a little more on, and actually, why don't we take a break and then we'll get into the system and controls. I have opinions on internal controls, so we'll definitely discuss that. It is 7 after. Why don't you come back at 20 after? Does that work? Okay, any questions about what we've talked about so far today? Okay, let's get into payroll. Is there anybody who does not have payroll as their biggest cost? Yeah, pretty much everybody does. That's usually the most expensive thing we do. How many of you have staff time allocated to other grants? What other grants do you have allocation to? So the usual suspects for right now. Does everybody fill out? Okay, you do other housing program work. So yeah, it's in the grant versus outside of the grant. How do you track it? Do you have an allocation system? Are you using, or are you just using the timesheet? Please fill out a wage allocation. Was this wage allocation developed in advance? Did they do it every week or however long the pay period is? Sorry, the tail is very much active right now. Y'all have no idea how hard I am at working to keep his behind off of camera. Okay, some do it weekly, some do it monthly. You do a monthly journal entry to allocate GL. That works. That is usually the most complicated part of running a grant, is getting payroll charged to the right fund. Does everybody do their payroll internally? You analyze, plan, and set up prior to the fiscal year. Okay. Yeah. In our perfect world, if we know what's going on, we want to have an allocation set up in advance. If we are running multiple grants and it's kind of, let's be honest, a little chaotic at the moment, then you're going to do timesheet allocation. Is there anybody is everybody doing third party? Nicole, who do you use? Paycor? They're a good one. Surprised as many of you are doing internal payroll as you are, but I know, Manuela, your tribal department. Cove, I don't remember. Are you a tribal department as well? Sabrina, are you a tribal department? And that would make sense. If you are a TDHE, I really encourage you to take a look at outsourcing payroll. Number one, it's going to save you a lot of staffing. Number two, they take on all of the liability. So all of the tax liability, all of that. Yeah, it's pretty fantastic. It simplifies your life. And for the cost, it's well worth it. So what are the key areas to watch? We already said the allocation is something that is a challenge. Yeah. I'm trying to remember how much I paid, and this was 1,000 years ago, but ours was under 500 as well. And it was so worth it because it took it off of me having to deal with it. And the fact that they take on the payroll liability, the tax liability issues, that made it worth it to me right there. So aside from ensuring that you're allocating time correctly, what are some other risk issues that you have with payroll? How about making sure the rates are correct? Is that an issue? Is that a risk? Absolutely. Is there a risk that somebody is going to get underpaid or overpaid? Yes. Is there a risk that somebody could still get a check even though they don't work there anymore? Yes. How do you prevent it? The first basic thing is the payroll action form. Who in your organization has the ability to add a person to payroll or to change pay rates? HR. Why does it need to be HR? Hiring and termination, segregation of duties. Again, they are completely outside of the process to issue payroll. Yep, they complete all of the incoming paperwork. They should either input the information or have a signed official document that they provide in finance, whoever's handling it, to initiate the process. Do you have anybody who reviews payroll before it goes out? What's your process? And reminder, you can always unmute if that's easier. Now this cat desperately wants to join. Okay, your accounting staff processes. Do they get the timesheets? Do the timesheets come directly to your accounting staff? Okay, your accounting assistant processes and the accountant reviews once the reports are available. Does anybody review the original timesheet, time card, payroll calculation? Who reviews? You have electronic timesheets. How do you review your electronic timesheets? Payroll journals. Okay. Yeah. And while I hit where I was going, we went, and there we go. Got to have somebody, the manager, supervisor, should review the timesheets. Why? Okay, you approve, but does the ED approve all of the timesheets? Okay. Yeah, somebody, usually the manager, you know, could be your ED, depending on how big you are and how much stuff is coming through, but you've got to make sure that the employee is reporting the correct hours. Got to look also for any leave used, any leave accrued. You know, was it approved in advance? Have we gotten all of those documents in place? Why is this usually the supervisor doing it? Because they're the ones who are overseeing the staff. They're going to be the ones who know, were they here? Yeah, were they really here? Did I authorize overtime? What happened? Who, yeah, and knowledge of the jobs and projects. Yeah, you don't know. Somebody else needs to be reviewing that information. So what is it you're looking for on your side? Does it seem reasonable? You know, if everybody is salary, do I have the same payroll? If everybody is hourly, am I seeing any significant shifts, or is it pretty much the same? Always want to have that review in place prior to processing. I didn't ask how many of you are using direct deposit. Is there anybody who does not offer direct deposit? Okay. Does everybody encourage people to use direct deposit? I mean, you can't force them, but you want to encourage them. Why? Because it's easier. It's less risk. You know exactly whose account it's going into, when it's going in. You don't have to deal with lost checks, anything like that. There's always somebody Yeah, less likely to have a reissue and less likely to be stuck holding on to a check. I've never understood why, but when using paper checks, somebody is always late picking theirs up. And it was not me. I can assure you of that. But it's always seemed very bizarre to me. What about the W-4? Who has that information? Yeah, it usually starts with HR. Sometimes it goes to payroll, sometimes HR enters it. Depends on how your system is set up. Why is it an HR issue and not an accounting issue? Is they're the ones who are verifying that this person exists. Well, Amy makes somebody else look at it too. What's your responsibility for the W-4 information? In accounting, your only responsibility is to ensure that it was entered correctly. The information you have is the information that was entered. How many of you work for a tribe that requires a W-4 update at least annually? This one's kind of like the W-9. Technically, there's no requirement to update it unless information changes. Yeah, if the employee's name changes, we have a marriage, divorce, whatever. If their filing status changes, if the dependents change, they should fill out a new W-4. Whose job is it to make sure that happens? The employees. Employees' job to know that they want to change their information and to start the process. It's HR's job to make sure that they get a W-4 at the time of employment. Okay, we already went through one of these. Let's talk about deductions a little bit. How many of you do a deduction for insurance? Okay. Yeah, some do, some don't. It depends on how your insurance is set up. How many of you have deductions for housing payments? They live in housing, you're deducting. How many of you have some kind of employee benefit plan and do deductions on that? What about child support or something along those lines? Yeah, like 401k. What's your documentation? How do you support the fact that you took money out of their account? Employee signed form. Yep. somehow there is an employee authorization that said, yes, I agree to this. And you have that documentation. What is your responsibility for those benefit deductions? You as in the accounting department, finance, what's your job? To make sure that the money gets where it's supposed to go. Yep, you've got to make sure you get it deposited into the 401k. You've got to verify if it's a housing withholding that it's gone to pay the rent. If it is an insurance, we can see that it's coming out. Payroll taxes that are withheld have to come out. How do you verify that all of that's happening? Reconcile. What are you reconciling? You're checking all of those withholding items and making sure that they do clear out. This seems obvious, but it happens that amounts get withheld, and then it never transfers. Yeah, monitoring those balance sheet accounts to make sure that they're zeroing out before the next payroll comes in. How are you going to verify that? Maybe GL, depending on the timing. Could be just a straight balance sheet review, but it's important to make sure that any withholdings are authorized by the employee and the amounts withheld make it to the appropriate destination. There's stories about tax withholdings never making it over. Was reading something recently, and I don't remember who it was. It was somebody famous who had payroll, and they had done the tax withholdings, and then they just kept the money. That was our former quarterback's dad. That's who it was. So I'm not famous to you, but famous to me. Yeah, that's tax evasion. That okay. Seriously. Yeah, yeah. I mean, it's sad that you've got to pay attention to that stuff, but you do. Is it going to happen often? No. But it happens just often enough that you want to make sure it's not happening to you. There you go. That was their selected new provider. How'd that work out for them? Not well. It's crazy, but stuff happens. So again, be aware. What about the mandatory withholdings like child support, anything court ordered? How do you address that? Court has to give you the order. Yeah, in our perfect world, the employee will sign an agreement, but if they don't, you still got the court order and you do it anyway. Yeah, whoever the authorizing agent may be. And I think on well, it could, I think county can get involved too. Yeah. So make sure you verify it, make sure you get the withholding, and make sure it gets to the right place. Again, we set up deductions, benefits as liabilities, because we're going to dump that money in. Oh, you make all of your agencies go through tribal. I have no problem with that. I think that makes sense. Yeah, I think that makes good sense. I was trying to think, there could be payment in lieu of taxes with some agreements in place. But yeah, I would never have a problem with them being required to go through tribal court, and it shouldn't be a big deal. Hey, deductions are the amounts that are withheld from the employee's gross wages to get to net pay. Benefits are things that are paid on behalf of the employee, such as 401k match. That's a benefit. If the employer pays all of the insurance, that's a benefit. Have to do the FICA Medicare match, have to document it, have to make sure you turn off the FICA match at the right dollar amount. The timesheets have to be signed. That's the main thing to get out of this. Record actual hours for those of you who are using time card timesheet to do the allocation. Make sure that is correct. Make sure the employee signs, make sure the supervisor signs before you deal with it. Again, you have to track the actual hours to be charged to the grant. You have to track leave. This brings up a question. Does anybody still have separate sick leave and vacation time, or do you just have one pot of leave? Is anybody doing just one lump leave? What's the advantage of doing just one pot of leave? You don't get to the end of the year and suddenly everybody's sick to burn theirs. Yeah. Yeah. How many of you carry over sick leave? Okay, if you do, that changes things. Most employers do not do a carry forward on sick leave, which means you use it or you lose it, which means people are going to get to the end of the year, go, I still have 5 days of sick leave. Cap on the hours you can hold. Yeah, it's a tough balancing act, because especially now, you don't want them coming in sick. We don't all want your thing, whatever that may be. But at the same time, don't burn it. Don't leave me holding the bag while you take a vacation on it. Can use it to pay towards an insurance premium if they leave employment. That's an interesting way to handle it. So if I left with a week's worth of sick leave, then I could use that to pay for my insurance premiums and delay having to go on Cobra or some other process where I have to pay. That's a great incentive. I hadn't heard of that before. Can they do it if they don't use up all of their sick leave, or do you already pay for their insurance? You pay a portion, and so do they. Just so you know, so I'm going to store that in the back of my head, and it's going to come out in another class because that's a really good idea. Yeah, you've got to make sure you're tracking leave. Do you have to separate it? No. I think that's awesome. Are you required to have multiple leave pots? And the answer is no. You do what works for you. Some people, it works better to have the lump sum. Some people choose to have the sick leave, and when there's a global pandemic, if people are still testing positive, extending the amount of sick leave they have with appropriate documentation. Are these all reasonable ways to handle it? Yes. As long as you're consistent and fair, I'm not going to have an opinion. Okay, quarterly filing is required for all employers that have a tax liability of over 2,500. You're basically filing your payroll tax deposits every time, every pay period. Is there anybody who's not doing that? Is anybody in here the person who has to file the tax reports? You do the review. Amy, tell me what you do with the review process, if you don't mind. And you can say no. You just look at the payroll accountant's report, make sure it's reasonable, make sure that the money gets in, filings are done, recalculating. Yeah, it doesn't make sense. And is the amount clearing out? Are we getting the information deposited timely with the appropriate information? Yeah, and good. You're checking the FICA share. Got to make sure you've got that right. Good times, right? Okay, Form 941. We file quarterly. Key piece of information you need to know. Yeah, your system should do most of it, and you're right. Does it make sense? Can we show that this came out of our withholding accounts and went to the IRS and all other interested parties? Key piece of information you need to remember, because we're going to talk about document retention. You have to keep payroll tax records for 4 years. Okay, for your grant documents, you keep 3 years. Does everybody have a record retention policy? Okay, yeah. Just make sure payroll 4 years minimum. Do you all pay workers' comp? Are you doing this through your insurance company? Okay. Do you have documentation to support all of your information? Any other questions on payroll or segregation of duties before we cruise into program income? Okay, the first thing I'm going to tell you is that program income is a full day training. There is an individual program income training. This is going to be a summary. This is the basic, like everything else. This is overview. If you have questions, feel free to reach out to me. Program income is any income that is realized from the disbursement of grant amounts. The only reason we're getting this, when is that training? I don't know when the next one is. You can always request it. If you shoot me an email, I'll look and see if I can find out when it's offered next. Elizabeth, do you know? I think that's the first picker. We'll see if we can get some info.
Yep. What was the question?
Is there a program income training coming up?
I don't know off the top of my head, but I can look. I'll get back.
Thank you. I'm pretty sure it's the first pick training, so.
Yep. Let me just double check.
Okay, thank you. Okay, so any money that we make because we're using IHBG funds is program income. We can keep it, save it up for projects. We can spend it. We can use it to match our grant money. We can use it for other projects. Have to have a system for accounting for program income because you have to report it on your 425 and your APR if the total amount of program income in the year exceeds $25,000. Is there anybody who does not have program income exceeding $25,000 a year? Okay. Amy, your program income is unrestricted. Treat it as non-program income. Just make sure you've got the documentation to support it was never over 25,000 in the year. Once it goes over the 25,000, all of it is program income and has those program income restrictions. I'm surprised because nobody ever says yes. So that's interesting. Okay, so what can you do with program income? Housing or housing related activities and not subject to other federal requirements. which leads to the logical next question of what the heck is a housing related activity? Facility, community building, infrastructure, business, program, or activity, including community development or economic activity that is determined to be beneficial to providing housing in an Indian area and would meet at least one of the following conditions. Would help a tribe reduce cost of construction, make housing more affordable, energy efficient, accessible, or practicable, would otherwise advance the purposes of NAHASDA. In general, the only time you can use program income for any kind of economic activity is right here. Okay, you've got to make housing more practical or affordable, reduce cost of construction, advance purposes of NAHASDA. Proceed with caution anytime you are going to use any program income for economic development. Because what's the thought process if you're using your funds for economic development? You're using it to start a business and make money, and that's you using the money you earned off of grant funds to do things to make your own money. Can't do it. You can have a construction company because that's going to meet the requirements. Can you use program income for extending services for emergency rental that was restricted? It's a housing related activity. It's a program that would make housing more affordable, energy efficient, accessible, or practicable. Yeah. Does anybody want to fight me on that? I know some people who are doing that for that reason. You are welcome. Yeah, I will. This is a hill I will definitely stay on because if the program is going to be beneficial to provision of housing in an Indian area and meets at least one of the following. So let's look at these. Yep, hang on. Okay. I didn't think it was currently on the calendar because, you know, it's September 14th and technically the year ends in 2 weeks, but sometimes I don't know everything.
Yeah, I just thought I would check because I know that is one of the trainings that First Pick does. So,
Yeah.
but who knows if it might come up, you know, later in the year, like the calendar year.
Yeah.
Mhm.
And if it's something that you feel like you need, request it through ONAP. You are very welcome. All right, let's talk about IHBG versus program income. IHBG funds are your funding allocation and any interest earned on invested IHBG funds. This is what you need to remember. If you are an investment tribe, any money earned on those investments is treated just like grant money. It has the same restrictions for affordable housing activities. Okay. So what's the difference between housing activities, and affordable housing activities. IHBG has to be used on affordable housing activities, period. Income eligibility, there you go. You can use program income for affordable housing activities. You must use it for housing related activities. What kind of income is generated from the use of IHBG funds? Give me some examples of things, income you receive. Admin fee it's a weird category. I would, for our purposes, let's count it as program income. The restriction on it is it has to be used to support the operations for mutual health. Almost never an issue because I don't know anybody who is charging an admin fee that actually covers the cost of operation. What about MEPA? Oh, is that program income? Yeah, MEPA's nothing. It is a liability. Why? Because it's not our money. What about when the unit conveys? Is it program income or is it non-program income? Oh, somebody's been doing their homework. It is program income depending on how much NAHASDA money was used. Here's the rule. If a unit has been substantially rehabbed, which is 40%, so if we have a substantially rehabilitated unit, we put of our DC&E, we put in more than 40%, then everything generated is going to be program income because it was generated from the use of IHBG funds. If we have not substantially rehabbed the unit using NAHASDA funds, then it is all proceeds of sale. Can you count it all as program income if you don't have the calculation? And the answer is yes. Can you count it all as proceeds of sale if you don't have the information? And the answer is no. So program income is income from fees, use of rental properties, sale of commodities, proceeds from mortgage loan, sale of equipment. Is there anything we need to discuss on this? I feel like we've talked about a lot of these as we've gone through. Feel pretty okay with this? It is not interest earned on planning and admin reserves, fees charged to borrowers to issue or service loans, LIHTC developer fees, income of less than 25,000 in the year. Why do you not count LIHTC fees as program income? It's not NAHASDA. LIHTC's a whole different funding source. Questions yet? Okay, admin charge. $37 Act mutual help. Here we go. Other revenue treated like program income. The quirky thing on the admin fee, though, is it has to be used to offset the operating and admin expenses for running 37 Acts, the mutual help program. MEPA, we've talked about. Again, it's not your money until the unit conveys. I would strongly encourage you to look at your MHOA. Does everybody know what that is? Mutual Help Occupancy Agreement. Look at those and see what have you agreed to as far as MEPA. What if they're evicted? What if they quit the program? What if they disappear? What happens to that money? What's the first thing that needs to happen with that money? Have y'all been in that situation? They've got about 25,000 in MEPA. And they got transferred. They will be living out of state and want to leave the program and return the unit and get their money back. What's the first thing that happens? And the first thing that happens is we have to fix that unit. We have to do the rehab to bring it back up to basically a new unit standard and start the process over. What if there's money left? What did I say we had in 25,000 in MEPA? And it cost us $10,000 to do the rehab. They did a good job taking care of everything. We didn't need to do that much. So there's 15,000 left in MEPA. What happens to that money? Who gets it? Has anybody had this happen yet? So you guys are making sure all homeowner charges are covered and returning to tenant. You're returning to tenant. Are you required to return it to the tenant? Depends on what your MHOA says. You donated back. Yeah, I'm a big fan of when you convey your unit, you being the tribe, TDHE, having in the agreement first right of refusal for the tribe, that they get the house, they have the first option to get the house back if you leave for any reason. The fact that you donated is just above and beyond. So are they gonna fix it back up, put it back in stock, and use it as a rental or a home buyer? I'm only asking because I'm nosy. Used it as mutual help. Interesting. So it came back in as, is it NAHASDA home ownership or is it the 37 Act mutual help? And you may not have the answer to that, and that's okay. 37 Act, interesting. Huh. Okay, key is it's what did you and the participant agree to at the time of move-in when they signed the mutual help occupancy agreement? Does it often happen that we have leftover money at the time somebody leaves? Yeah, it's pretty rare. Usually they disappear in the night. There's minimal MIPA and we spend a bunch of money fixing the unit and start over. Okay, when we talk about substantial rehab, 37 Act units, again, it's that the 40%. If it is over 40%, if we have put more than 40% of the DC&E, oh yeah, can we do a walkthrough on that? Yeah, hold on. The DC&E, basically the development, we're generating it if program income is only generated if we have put more than 40% of DC&E from NAHASDA funds into the unit. That is true for both rental units and for mutual help. The big difference is that's the only calculation you have to make for mutual help. If it's over the 40%, any MIPA that is conveyed to you is going to be program income. If it's below 40% NAHASDA, then it is all going to be proceeds of sale. So if, let's say we had a donated house, because Manuel is asking about a journal entry here. If we're going to add back a house, can we do it? Yes. What amount do we use? How do we determine what the appropriate value is? The donated unit hasn't cost us anything. How do we determine how much it's worth? Yeah, I would go with an appraisal. Market value is kind of hard because depending on location and trust status of the land, we may not be able to calculate market value. So we have to go back to what's the appraised value. Does that make sense? Okay. So somebody has chosen to donate a unit. The debit is to what? Housing stock. I don't see any way it wouldn't be that. Yeah, other asset, housing stock, something like that. Has to be asset. What's our liability? And this is where it gets interesting. We can't just put a house back in stock and ignore the other half of the entry. We're not going to put it in due to, due from either. I would see if we have the liability account for donations, donated assets. Yeah, I think it needs to go somewhere in there. I mean, we're not receiving cash, but we are receiving a donated asset. So it's not revenue. But I think it's going to have to come back into our equity side as a donated asset. Does anybody have other thoughts on that? And I'm saying this because the normal way we deal with capital assets, with fixed assets on the books, if we're doing government funds, is that we do a debit to total fixed assets, and then we have a credit to fund balance reserve for fixed assets. So I would look at either just dumping it in that reserve for fixed asset, or doing a separate donated asset line item. And the more I think about it, the more I like the donated asset. Just because 5 years from now, when we're trying to figure out why this house that we conveyed is now back on our books, we can track it back to what happened. If it was newly built, we would have had it expensing out through the capital outlay line item on the schedule of expenditures of federal awards, revenues, expenses, changes. Then at the end of the year, we're going to debit that line item to close out that expense, right? We're going to close that. We're going to transfer the asset into construction and process. Then when the construction and process is done, we're going to clear out the unit out of our construction work in process account and put it into our housing stock or housing asset account. Make sense? And I'm sorry, we're going to credit the expenditure and then debit the work in process. Then when it's ready to transfer, we're going to credit the work in process and debit the asset. Does that answer your question? Yeah, because it's a hybrid. Okay, it's kind of a capital asset, but it doesn't depreciate. It amortizes, it doesn't depreciate. I know, it's weird. Yeah, and it's not just your confusion, as we discussed yesterday. It's just weird. Even if you're somebody who's been in government accounting for an extended time period, housing stock is its own separate oddball treatment. Any other questions on that before we go back to program income? Okay, you've got my email too. I know you're working on some stuff. Feel free to reach out. And that goes for all of you. Okay. So how do I know if I've put more than 40% of the DC&E for the unit? How do I know if I put that much NAHASDA money in? Do I just know? Is it just magic? Can I just like wave my hands over it and feel yes or no, it's substantially rehabbed? How do you know? You got to track it. You're tracking this in your housing management software. Every time you do a work order, there should be a unit number associated with it, and that cost needs to go to the unit to help us determine, is it program income or not program income? If for whatever reason you do not have the historical records on that, then it's all program income. Why does it default to program income? Because it has the most restrictions. Okay, we talked housing activities. That's what we do with our program income, right? We haven't talked about this yet, but let's talk about it right now. Proceeds of sale. Proceeds of sale are not program income. They are also not non-program income. They're a hybrid in the middle. Proceeds of sale can be used for housing or community activities. Okay. AEL, not going to get into too much other than saying, if you have rental housing and you want to determine whether you have program versus non-program income, you have to do this calculation. The first thing you have to do is determine whether it has been substantially rehabbed or not. If it has been substantially rehabbed, program income. If it has not, then you can use part of it as program income and part of it for non-program. Okay. Have you all been involved in any of this stuff before? It seems at first glance like it's a lot more complicated than it really is. Just remember, and it is, God, what's the PIH notice on this? I want to say it's 2019? Hang on. It's 2019-07. Okay, when I talk about the DC&E, can you see my screen?
Yes, we see it.
Okay. Dwelling construction and equipment costs per unit as of 10/1/97. This is through negotiated rulemaking. Everybody decided, tribe, HUD, everyone, all the tribes agreed that we don't know how much it costs to build this unit back in the day under 37 Act. So for purposes going forward, 10/1/97, we are going to say this is how much this unit cost. That's the dwelling construction and equipment cost. And we are going to use 40% as our arbitrarily designated number to determine substantial rehab or not substantially rehab. Okay, so the first thing you do is you come to this chart and you find yourself. Somebody give me, who's in here? We're Northwest. Let me get to it. There you go. And there we went. Basically, you're going to find your place on here and decide if we had a 2-bedroom unit, let's say we're Coeur d'Alene, 2-bedroom unit, the DC&E, which is basically the total development cost, what we call total development cost now, was $58,848. So if we put more than $23,539 of NAHASDA money into repairing and rehabbing this unit, then it is considered substantially rehabilitated. Okay, if it's mutual help and it's substantially rehabbed, all the money we receive is program income. If we put in 23,000 even, then all of the MIPA that we receive is proceeds of sale. Okay, 2019-07. If you have to do this, call me and I'll walk you through. Does that kind of help you visualize what the heck we're talking about? Just knowing that chart exists, does that help a little? You know, now you know there's real numbers out here that you can refer back to. We're not making them up. Okay. The AEL comes in if you were calculating program versus non-program income in rent And that is Appendix D of the same PIH notice. I will get into detail on that if we have time. We can come back to it at the end, but there's a lot of math involved. Okay, here's your just basic overview. We're doing rent. We received $200 a month per unit in rent this year for 4 low rent units. Hang on, just lost my screen. Look, they're all formula, which means 37. They have not been substantially rehabbed. AEL is $4,800 per unit per year. There's a chart that tells us 46% of the AEL, again, it's just an arbitrary number assigned. There's no magic calculation. So 46% of the AEL is $2,208 per unit per year. Total rent, $9,600. We said that earlier. Okay. AEL, $2,208. This 46% unit per unit times 4 units, 8,832. That is the non-program income. Anything left after that is program income. Whose mind is blown? What do you need to know here? For you to do, first question, are you personally involved? Is your housing authority doing these calculations? Are you doing this, or is your fee accountant doing this, or are you just counting all of it as program income and moving on with your life? Has anybody seen this before? Or are you just thinking, please make it go away? Okay. I'm going to, let's put off the calculation for right now. And if we have time remaining, we'll come back to it. And instead, let's move forward and talk about what you can do with the money. Because if you haven't seen this before, there's a good chance that you're just counting everything as program income, and that is totally fine. That work? Is that reasonable for everybody? It's like, please don't make us talk about this anymore. Okay, so we'll skip that for now. We just talked about the rehab. We looked at that 40% DC&E. Does everybody remember that? What can we use proceeds of sale for? housing activity, community facility, or economic activity that benefits the community. If you have spent less than 40% of that DC&E amount on a mutual help unit, then when that unit conveys, the money you get is proceeds of sale. Here's what you can do. And we mentioned this with the program income as well, not subject to any other federal requirements. What the heck does that mean? What does that mean to you? Let's say we want to develop some housing. We're going to use program income to do it. Has anybody done that? I'm seeing more and more of it. Yeah, I'm seeing some tribes are looking at building smaller units and have been holding back their program income or proceeds of sale to build maybe a couple of duplexes. Not subject to any federal requirements. What the heck does that mean? Means you don't have to do an environmental. Still have to follow your policy. So if your policy says you do environmental for everything, you're going to. Can simplify your procurement as well. Here's the other cool thing. If you build a duplex with program income and you collect rent on that duplex, what kind of money is that rent? Is it program income or is it non-program income or is it proceeds? Or does it depend on which we used? Duplex built with program income. Rent comes back in. How do we class that money? Correct answer is non-program income. What restrictions are in place for non-program income? Do you have to spend that money on housing activities? And the answer is no. You can spend it on whatever your board has agreed to. Crazy, right? Don't look at that. It's going to make your head hurt. If you have program income generated from an eligible activity that was funded with IHBG funds and with other funds, then the amount of income to the IHBG program will be based on a percentage calculation that represents how much IHBG money was in there. If it's 50-50, that's how the split will be. Questions on that? How many of you are combining funds? IHBG funds with program income or LIHTC. One of the things I've seen fairly recently is housing that was developed with donated funds. It was emergency housing. Part of it was from a local community development, and part of the funding was IHBG. Can you do that? Sure. Just have to make sure you've got it accounted for. Do you feel more back on track now? Nicole, I'm worried about you. Do you feel a little better? Does this feel more like more solid ground? Talk about reporting and monitoring. And honestly, we've been, I can come back to it, and it is weird. And remember, that's usually a most of a day class to go through that. So my bad for trying to include that much. But we'll still try and do a walkthrough. Okay. Reporting and monitoring, link between SF 425, APR, tribes financial statements. What's the link? All of this information should tie. We talked a little bit about the schedule of expenditures of federal awards. Is anybody familiar with that? Is anybody familiar with that? It is literally a list of, we had this grant and this is how much we spent. Okay, that total should tie to both your SF 425 and to your APR, because that's what we're reporting. How much cash money did we spend? Why do we have to prepare that schedule other than because it's required? And it's required in 2 CFR 200 subpart F. It's a basis for determining whether you are required to have a single audit or not. Your auditors are going to use that to determine, did you spend more than $750,000 this year in grant money, and on which programs? Okay. That total should tie to your APR, should tie to your SF 425. Financial management system must provide accurate, current, complete disclosure of financial results, each federal award program in accordance with the reporting requirements set forth and in the monitoring and reporting program. Okay. Submittals are required for 425. If you have not looked at PIH notice 2022-15, you need to look at it. If you are not an investment tribe, you will file your 425 annually. When is it due? Has anybody made it that far yet? 90 days after the end of your fiscal year. What else is due 90 days after the end of your fiscal year? What other major report gets submitted that same time? APR. Mm-hmm. Yep. If you are an investment tribe, you still have to file quarterly. Okay. We've been through the APR. IHP and APR reported on the same form. We have to open it up for public comments. Has anybody put their info out there and gotten any comments? Almost never happens, and I don't know why. But in general, people don't really ask that much. Okay. Is there any other part of the APR you feel a burning urge to discuss on the numbers? Because I feel, again, I feel like we've covered that pretty thoroughly. We have our IHP plan, our APR is the reality, and then in each activity line item, we have discussed what we accomplished, and if we did not meet our goal, what happened. Source documents for the numbers, our financial statements. Everyone needs to be engaged in the data gathering and the reporting. How do you make sure everybody is engaged in that? What do you do? You put in your IHP an activity that you were going to assist 30 new participants. You do a financial statement review meeting. Okay, hold on to that. We're going to assist 30 people with homeowner repair and rehab. And we expect to spend 500,000. Okay, that was our goal. Is that a good goal? Sure. For the financial statement review meeting, what are we going through? Are we verifying how much we actually spent? Or are we verifying how many people we assisted, how many households were assisted? Do we need both? Yeah, we need to verify how much money did we spend? How many units or households, whatever our target was? How many people were assisted? Why is there a difference? So it's not just financial information that's included in the APR. If you said you were going to provide some kind of pre-admission training on budgeting and basic maintenance, is that a financial goal, or do we need to count participants? The answer is you're going to have to count participants. So it's more than just your financial, which means you're going to need to talk to a lot of people to get all of the information. And if you're not currently involved in the process, ask the people who are in your tribe and kind of get a feel for how you're doing it. So what makes the APR so darned important? Well, because it's required. Public comment. And not necessarily just public comment, but this is going to your board and your council as well. This is where you're telling the world, here's what we did. All you people who think that we're not doing anything over here in housing because you don't get assistance, let me tell you what we did do. Here are all the programs that were offered. Here are the number of people assisted. Here are the different options that were offered. We have this number of tribal members. Do you ever have to tell what tribal members were assisted? Is that public info because they were assisted with grant? I see you helped 10 families with down payment assistance. Who were they? What's your response? It's a tribal member. It's not a council person. What's your response? Yeah, it's none yet. Are we going to say that? No, but we are going to say, I'm sorry, but we are not allowed to reveal that information. Confidential information. They will have my job if I tell. They will take away our grants if we tell. Not public, don't reveal it. All they need to know is the number of people assisted. Tool to track your IHP progress. You should always be making progress. This was our goal. Okay, we didn't make all of it this year, but here's what we're going to do to finish it next year. And then show this is what we did. Self-assessment and planning. How are we doing? Do we have continuing administrative capacity to do what we want? Being, can we meet the requirements? If not, what do we need to do? If we know we have some staff people who will be retiring in the next few years, are we kind of addressing that now to bring somebody up to speed, or are we just gonna play like it's not happening? Think about where you're going. The technical assistance. You can always ask for technical assistance through ONAP. Okay, it's already paid for. It's already in a budget. Request the assistance. In addition, as part of HUD's review of your APR, they may suggest, hey, you're having a little trouble here. Let's see if we can get somebody out to help you. Trust me when I tell you, ONAP staff want you to be successful operating your grant. They do not want to operate your housing, okay? They just don't. They want you to be successful doing it. And they will help you get these kinks worked out. Okay, key sections again. In the APR, we've got our actual outcomes and outputs, program accomplishments, budgets, expanded formula area, self-monitoring, inspections, audits, public accountability, and jobs supported by NAHASDA. A lot of this you're self-certifying. It can be checked, but for the most part, you're saying, yeah, we did the things we needed to do. Okay, reporting on the budget, again, actual sources and uses. Self-monitoring is required. That was me. You have to have your self-monitoring completed in time to include in your APR. You have to complete at least annually. I'm going to assume everybody is doing their self-monitoring. I do know there's some training coming up on that November, I think. There was a training last week that I do know, and I think there's another one coming in November. What is HUD monitoring about? What are they doing? There's that continuing capacity thing. Did you carry out your eligible activities in a timely manner? Were activities and certifications in accordance with individual program requirements and other applicable laws? You know, do we have low-income persons? Did we do Indian preference? Do we have policies? Did we do our self-monitoring? Did we do our inspections? All of these things that you're verifying. Do we have continuing capacity to carry out those activities in a timely manner? What the heck does be audit ready at all times mean? Real question. What does that mean? When you read that, what does that tell you? You should be doing all of the stuff throughout the year. We're not going to do 12 months worth of bank reconciliations in the last month of the year. We're not going to have giant piles of research sitting around waiting to be filed until the very last minute. These are the things we do every day. This is our normal job. We are constantly making sure that we are doing what's in our policy, what's in our procedure, and what's in our IHP to the best of our ability, and we have the supporting documentation we need. Trust me when I tell you, you cannot do it all at the last minute. Record keeping and reporting. You know, I just realized I forgot to do an afternoon break. Do y'all want to take 10 or do you want to keep going? Having said that, we've got about 10 more slides, 5 more slides. What do you want to do? You want to keep going or you want to take a short break? Let's finish out these slides and then anybody who wants to stick around and talk program income, we'll take a few minutes between those. Is that fair? Because this is going to go really fast. We've been talking about it. Everybody has a record retention policy, yes? Do we have records that adequately identify source and application of funds? Amy, if you're dying, go take a quick break. We'll be here. NAHASDA 24 CFR 1552 requires financial and program records to be retained at least 3 years from the end of the grantee's program year or settlement date of litigation, claim, or audit that was started before the expiration of the 3-year period. What kind of records do we have to keep? What are you keeping? Anything that supports the information in your APR or your financials. Okay. How long do you keep it? 3 years from the last time it's included on your APR. So think about rental. I mean, it's really easy with procurement. We did a procurement, we hired an attorney, their contract was for 3 years. So the end of the contract, we add 3 years and then we can get rid of it. What about admissions and occupancy? How long do you keep those records? I was admitted into mutual help in 2005. Do you still have all of my records? My unit has not, I haven't conveyed. Do you still have all of my info? Do you have my research, inspections, all of that? Yes or no? You do. Why? You still have to keep my information up until the time the conveyance is complete, plus 3 years. Why? Because you're still reporting on my activity in the APR. Like, you're still inspecting my unit, you are still collecting my MIPA, you are still paying my insurance, all of those things are still ongoing. How many of you are keeping your records electronically? How many of you are keeping your records, paper records in boxes? Totally fine to do both. Does it matter what method you use? And the answer is no, as long as the records are accessible to Inspector General, to HUD, to your auditors, you know, anybody who has a reason to need access to that information, as long as they have access, it doesn't matter. A lot of people are really focused on scanning and doing electronic files now. You are not required to do that as long as they're accessible. How many of you have record and don't raise your hand, don't acknowledge? Other tribes I know, but not you, because you would never have 20 years worth of financial documents sitting in a storage shed. Is that okay? Not ideal. I like that. Not ideal. Why is that a problem? I mean, is it a problem? It's still not ideal. Sorry, but that's like one of the best ones. Yeah, because if you still have it, they can still look at it. Also, you're in violation of your policy. There is nothing in the regs that say you can't keep your records forever plus a day, but it's not going to be in your best interest. Exactly. Yeah, you only have to keep it as long as the standard is met in your policy. You say you keep it for 3 years, that's all you keep it. Because let's say, again, this would not happen to anybody in here, but let's say you're going through a monitoring and there is a determination that you have been assisting somebody who was non-low income because you didn't include all of the required info. Okay. You didn't have in your IHP that you wanted to serve those people between 80 and 100%. Is that going to be a finding? Yes. Will you be paying money back? Yeah. Let's say we've got 20 years of records sitting there. Can they go back and check and see if you ever did this right? Can they literally go back through 20 years worth of files to see, was this done correctly or was this done wrong for the entire 20 years? The answer is yeah, you could be liable for those disallowed costs. And you're not in compliance with your policy. Don't keep stuff longer than you have to. Make sure you keep it as long as you have to. You do have to have eligibility. Should have eligibility at time of admission in everybody's current file. Need to document any research, any inspections, all of that. Tenant charges, anything that's relevant needs to be kept until the person is no longer being assisted plus 3 years. Questions on that? How long do we keep payroll? Four years. Good job. Who has access to your records? Do your auditors have complete access to your records? Yes. Does HUD have access to your HUD records? Yes. Does the IG's office have access to your records? Yes. Do tribal members have access to all of your records? No. Do you have internal restrictions on who has access to different records? The answer is you should. Not everybody needs access to everything, particularly personnel files. That's why a lot of people keep all of that over in HR and on a completely different system, so nobody gets to mess around. Okay. All financial and program records, supporting documents, statistical records of the recipient, which are required to be maintained by statute, regulation, or grant agreement, retained for 3 years from the end of the program year during which the funds were expended. If you're still spending money on them, they're still on the APR, you still have to hold on to it. Any litigation, claim, negotiation, audit, or other action involving the records have to be maintained until the action is complete and resolved, or until the end of the 3-year period, whichever is later. We're a month from the 3-year period, and we have question cost. We have to hang on to those records beyond the next month. We have to hang on to everything until completion of the action and resolution of all issues. Make sense? Things you should keep. Bank recs, journal entries, financial statements, general NAHASDA grant file, vendor files, tenant files, personnel files. Does anybody have 3 separate files for each employee? You've got 2. Yeah, just keep it, just protect it. Questions? Okay, I am backing up to program income. Now that I know we've got everything else finished. Okay. I am not going to make anybody stay for this, but anybody who wants to stick around, since there's still a good hour left of training, is welcome to. Anybody want to take like 5 minutes before we start in on the program income? If you do not want to stay, I appreciate you coming and thank you very much. Otherwise, let's take everybody take a really quick bathroom break and we're going to talk about program income. Fair? Nicole, you still with us? May run to the bathroom. You want to go through this? Going to give you a basic walkthrough. Who's still here for program income? Proceeds of sale. Okay. Let's do, here's what we're going to do first. Okay, first things first, we need to pull this. Do you see the schedule of maximum allowable dwelling cost again? Does everybody see that? If not, I may have messed it up. Okay. Good. Here's our situation, and we're going to put some numbers in here. We have a unit ready to convey. It's a 3-bedroom. And the amortized value is $35,000. Seem like a good enough number? We are, who do we want to be? Let's be Warm Springs. When we say amortized value, that's how much they have in MEPA. That's the value, the purchase price of the conveyed unit. Okay. We are Warm Springs. The assumption is the unit built for, sorry, as you can see, this cat just wants all the love while I'm trying to type. Okay, so we built it for 66,121. They've been living here for 25 years. The amortized value is 35,000. We all good with that? And you're welcome to unmute if it's easier. Okay. The first thing we look at, how much money have we put into rehabbing the unit? And in this case, we put in insurance. It had a water leak. We put in insurance proceeds, 10,000. If that is all we put in was the 10,000, and the 40% DC&E for a 3-bedroom unit is 26,448. Have we substantially rehabbed that unit? Is 10,000 more than 26,448? No. We have not done a substantial rehab. Everybody good with that? If it doesn't make sense, speak up, because I'll try something else. Do we all agree this unit has not been substantially rehabbed? Everybody clear where that number came from? When we collect our $35,000 in MEPA, is that money program income or not? Lucius move. If you're looking at that, does that make sense now? Just this piece. Don't make me start calling on everybody. Amy, does it make sense to you? A bit. Where do I need to back up? Manuel is good. Amy, where do we need to back up? Let's assume it's me. Sabrina, how are you doing with it? Good or just okay? Okay. Amy, do you agree with me that? Okay, are you okay now? Okay. So now let's say we put in $28,000 of NAHASDA funds for a new roof, new windows, repair floor. The 40% DC&E is still the 26,448, right? We all agree on that. The MIPA, no. None of it has to be, it's an all or nothing deal, okay? When we're looking at mutual health, if it's over the 40% for rehab, then it's all program income. There's no portion. It's an all or nothing process. It's either all program income or all proceeds of sale. There's no mix. So what's the situation here? And when we collect that 35,000, how much of it is program income? Full amount. All 35,000 will be program income. Because it's over the 40%. Okay. We have that much NAHASDA money in, then we are going to make the arguments that these funds were generated through the use of IHBG funds, therefore it has to be all program income. Okay, everybody good with that? Do we have to do anything else with a mutual help unit? We're done. That's the whole process for mutual help. Okay, so let's make sure everybody's comfortable with that before we get into rent, because that's a little messy. We good? Okay. Let's find out. Look at this question. Mutual help unit has a 40% DC&E amount of $40,000. Unit was rehabbed in 2014 using $20,000 in IHBG. In 2020, we had another $30,000 rehab, also using IHBG funds. How much IHBG money do we have in this unit? $50,000, and proceeds of sale are all program income. We put in 50,000. Put in 20,000 in 2014. We put in another 30 in 2020. We have a total of 50,000 in this unit. The DC&E amount is 40,000. Is 50,000 more than 40,000? Yes, it is. How much of our conveyance amount of $20,000 is program income? All of it. Yep, all has to be program income. Feel okay with that? I'm not going to get into that. So that's the main piece you need to know. Do you feel relatively okay with that? Kind of, sort of? Dang it. I keep losing my screen. Hold on. Okay. You feel pretty good with that? Do you want to try the rental? It's up to you. And to be honest with you, a lot of tribes are just throwing everything into program income, which is again allowed. You tell me what you want to do. Do you want to give this a shot? See if you can make it make sense, or what do you want to do? Because I mean, literally, I'm here for another almost hour, so it doesn't matter to me. Who has a burning urge to learn about that? We'll walk through here just for fun. want to show you a picture. This is a chart with allowable expense levels. Okay. I don't even know who's still here. Amy, Manuela, Sabrina, you guys still game for this, or are you done? You're allowed to pick whatever. Yes, you're still in? Okay. All right, let's do this. The first thing we have to do with rental is the same thing. Amy, you can shoot me an email. It's okay. Here, let's pick on, or pick on Curdling again. All right. The first thing we do is make our decision like we did with the mutual help. We have to determine, has the unit been substantially rehabilitated or not? If it has been substantially rehabilitated, it's all program income, because program income is income generated from the use of IHBG funds. Okay, we are all in agreement with that. Yes. This is Appendix D to PIH Notice 2019-07. Okay, this is where you get the annual expense level. It's determined 100%, and then we have the 46% of the AEL. There is nothing special and magical about 46%. That's just the decision that was made. Okay, so don't just go to the chart and accept it. Don't try and figure out how you can calculate it, because you can't. All right. So here we go. In this case, these units have not been substantially rehabilitated, which means we are going to have a mix of program income and non-program income, correct? Does everybody agree with that? Okay. All right. We receive $200 a month. Actually, let's do a different one, because this one's we're gonna have multiple. And I don't want to do that for the first one, because you're gonna get scabby. My computer hates me. Stay with me. Okay. We're receiving, the tribe is receiving $200 a month per unit for 4 units. Units are not substantially rehabbed. We have a mix of program and non-program money. Okay, we're good, we're good. We collected a total of $9,600 in rent for the year for these 4 units. 200 a month times 4 units, 9,600. Everybody good with me? Okay. When we went to Appendix D, we determined that the AEL, the 46% of AEL is 2208 per unit per year. If we want to know how much it is per month, it's 184. Okay. Is everybody good with that? We're charging 200, 46% of the AEL is 184. How much of the money that we are collecting is program income? Total rent minus the 2208 per year times 4 units, 8832. $768 will be our program income. Another way to do it, and I hope this won't be too much, is you can do a per unit per month, $200 per month, and we said that the AEL was 184 per unit. Just divide that by 4, and that's how we got it, which means $16 of our rent collected per month is going to be program income. $16 a unit times 12 months times 4 units is $768. Is everybody with me? The 46% of the AEL amount, the $8,832, it's just that 2208 times 4 is our non-program income. Does that make sense? There, anybody completely lost at this point? Yeah. It just comes down to what's our total rent? And is it more than our 46% AEL? But we don't have any program income if we are not over that 40%. It hasn't been substantial. I'm sorry, exactly opposite. We don't have any non-program income if it is over, if we've put more than 40% of the DC&E into rehab. In this case, if 50,000 is more than 40,000, we have no non-program income. Everything is program income. So how many of you are dying to try this with your own rentals? You're not going to try, Amy? Some people do, some people don't. I don't have really strong opinions either way. I think that the majority of your funding is going to be and should be spent on housing activities in the first place. Yeah, there's always the option to record it as all program income. Don't calculate anything. Gonna throw it in program income and we'll spend it all on housing. Which, to be honest, is probably what you're gonna do anyway. Does that rationale make sense? So again, you don't have to do the calculation unless you want to not count all of it as program income. You're going to count all of it as program income anyway, spend it all on housing, fine, we're done, don't do anything. That's a lot. Does that make more sense than it did? Manuela, how are you holding up? Does it make sense? Are you going to throw it all in program income and be done with it? Yep. Sabrina, what about you? You going to toss it all in program income, be done with it? Oh, good. Okay, are you the person who's going to have to deal with this? Nope. Do you have a fee accountant doing it? Or somebody in-house? In-house, okay. If they get stuck, although honestly, they probably won't if they've been doing it for a while. It's just getting it down the first time that's complicated. Once you've got it down, it's there forever. But if they ever have any questions, have them reach out. Amy, are you throwing everything into program income and calling it good? Maya, how about you? You good? You probably knew it anyway. Katie, I feel quite certain you already knew it. Okay. Does anybody have any questions? Does anybody have any comments? Elizabeth, do you have any comments?
Yep. All I had is already put in the chat, but I'll put it in again. If everyone could take a moment to complete the post-training survey, that really helps us out in seeing if these trainings are working, if you want any more content, different content, things like that. So if you could just take a moment to complete that. And also within the next week, you'll be receiving your certificate of completion for this training.
Yeah. And man, well, that's exactly it. You know, you need to be aware you can do this, but what are you really using the money for anyway? And if you're going to use all of it for housing, I'm with you. Shove it in program income and be done with it. I think that makes perfect sense. And that's what a lot of people do. Now, I'm never going to question that. All right, you all, thank you so much for hanging in. I know it's been a long 2 days. Financial management gets a little dry. Y'all were great about participating and I really appreciate it. I'm going to hang out for a few minutes if anybody still has other questions. But other than that, thank you. And have a good afternoon, or what's left of it.